Need to Know with Jeff Angelos, your daily conversation about politics, pop culture. Living in Iowa, all politics aside, all reports indicate that the economy nationwide and here in Iowa is good. Now, what's interesting about that to me is how consumers are spending during the good times, but don't necessarily save during the good times. Joining me on the Lippman Law Firm, WHO Newsmakers Line financial strategist Clark Hodges. Clark, welcome to WHO in Des Moines. Good morning to you. Oh, let me pop Clark on the air here. Clark, I apologize. Good morning. How are you?
I'm good. Thanks for having me.
Let me ask you about this. It's very interesting to me, this phenomena that when the times are rolling, that the reports are we're spending, but we don't save. Do you see that kind of behavior amongst your clients and when you're studying the economy?
Yeah, I do think that is human nature, because if you stop and think about the headlines post-recession, were things like, people are paying down their credit card debt. And so what you had is human nature. You get burned, you get stung, you pull the reins in, you tighten the belt, you do wiser moves with your money because you just went through a real painful time. Well, the opposite is true. When it's euphoric out there for you and you're getting a raise or you've got a tax break coming or you just got a job or your 401k balance is all-time high, you're going to feel good, and that's one main factor in spending money is how you feel about your overall situation. And so the consumer, Americans are consumers by nature, and it doesn't surprise me at all that they're not saving as much money because they got more to spend on stuff,
Right, and does that spending continue, Clark, during the good times, or is there some point where the consumer goes, I was just looking at my savings account, I ought to do some savings, or do we just let the good times roll?
We let them roll till that party ends. And so whether we're at midnight and the party ends at 2 a.m. or whether we're at 8 p.m. and the party ends at 2 a.m., we don't know that.
Yeah.
But by and large, most people will get egg on their face because they didn't save, and then they wake up one day and we're in that recession or we're in that bad time and they didn't do the smart thing. That's just human nature, I think.
Yeah. Clark, what do you think is fueling consumer confidence right now? Why are people feeling good and they're loosening up the wallet or the purse at this particular point?
Well, I think you've got a situation primarily by wages going up. So people that are employed in this given year have been all encompassed into an environment of positivity when it comes to business. And I'm going to get a raise. Our business is doing better, so I'm going to benefit and get a raise, or we're going to get a tax break and we'll have more money. So I think it's by and large that wages are going up. And also you could just throw in there unemployment going down, but if you get a job, you're going to feel better and spend more. But if you're getting a raise, you're definitely going to spend more.
So, Clark, as we're getting near the end of the year and your clients are coming in and things are going well for them, what's your near the end of the year advice? What should they be taking stock of?
Well, from a standpoint of investing in the stock market, you cautiously optimistic, but don't take risks where you don't have to. Mm-hmm. If you are investing in things that are expensive, and you can evaluate that, then I'd say lighten up or don't buy. But if you're investing in things that are value-oriented, have a good value, show value, then I think you can buy no matter what because you can weather the storm in value. But there's a lot of companies out there that are priced to perfection, and they're priced in such a way that if they have any sort of hiccup, or if we have any sort of hiccup in the economy, that those stocks will get hit pretty good. So just cautiously optimistic, and always assess your risk. Don't run from risk. Assess it. So risk is not a bad thing. If you assess the risk and it's too risky for you, then move on. But if you assess the risk and say, okay, I think I'm willing to take this risk, then go ahead and do it. And be a long-term investor. Don't be a trader. Don't be a day trader. Be a long-term investor.
And do you expect, Clark, I know I'm asking you to look into your crystal ball, but we're talking about consumers increasing their spending. We're about to get into the holiday season. Would this be an optimistic time for our businesses?
Oh, yeah. I think Christmas is going to be a bang-up year. I do. I think it's going to be real positive. And also, businesses, by and large, are so excited about the deregulation of a lot of the industries out there. And that excites a lot of business owners more than anything. And so the deregulation is making all the bosses in the world happy. And then that trickles down and makes all the employees happy because the boss is happy. So they're going to expand and grow and do a lot of things. So I think it's a real good, feel-good story from that standpoint.
That's financial strategist Clark Hodges. Clark, always appreciate your point of view. Thanks for joining me this morning.
Hey, thanks for having me. Have a wonderful day.
7:15, temperature of 67 degrees, and some light rain dotting the radar this morning on Memphis Morning News. And I think are we on standby, or is he ready to go? Okay, he's with us this morning. We say hello to financial strategist Clark Hodges. Clark, thank you for joining us. I know we've seen some good economic indicators lately, but this morning we're talking about the rate of U.S. savings. Hello.
Good morning, Clark.
Good morning. How y'all doing today?
We're good. Now, when we talk about savings and the rate of savings, you can put your money in a 401k to save it and cross your fingers that you don't lose it on any given day. But you could also put your money in some kind of savings account. You're just not getting a whole lot of return, if any, 0.0000 something on a savings account these days.
Right. You're not getting anything. When I put aside money for savings, I put it in investments. I go ahead and put it in the market because I'd rather take a chance and get a little better return, and that's me. But putting it in a CD, you're not getting anything, so it's really not worth it. But you just still need to save the money. But what you put it in is also important.
So, Clark, I've seen these economic indicators, and with incomes growing, a little bit month over month, and with some spending up, how does this tie into the savings rate, or does it?
Well, I think personally, if you look back at 2008, went through a recession, and the next 3 or 4 years, you saw people save money. You saw credit card debts go down. It was a nice situation because you felt like people were being responsible, and they learned a lesson from going through a traumatic time financially through the recession. Now you look at what's going on, and you see wages going up. You see jobs looking good. You see the economy growing at a higher percentage than it has in about 10 years. And you think, why are people saving less? And I think the lesson here is that, by and large, people are spenders. And when they feel confident about their situation, when they get a raise or they get a new job or they just feel good about their 401k balance that they see every month, then I think the spending part of that kicks in, and that's why people are spending more and not saving as much. And I think that's just the way most people operate. And, I think that's not necessarily a bad thing. As long as you're doing a little bit of both, you're okay, I think.
Now, I know we're about to embark on ginormous spending season. As Tim and I were even just talking about, all the Christmas shopping commercials are out. I'm already getting emails about Black Friday sales before Black Friday. Why wait? But let's talk about quickly, what is the amount of savings? What percentage should people have stored away, in case of emergency? What's the general rule on that?
My general rule is 10% of your income. If you could save that much, you're way ahead of the ball game. If you do that on a consistent basis, month in and month out, I do think you will be somewhat worry-free later on in life. Now, it's a long-term thing. It's not something that you can do one time and be okay with it. As far as having money set aside for those emergencies, you hear different variations, but if you got a couple of months worth of bills set aside for some emergency, I think that's pretty wise. And just keep monitoring the situation. And then I'm a big believer, everything is automated these days. And I think if people sat down and went through the automated bills that they've signed up for, or the services that are $4.95 a month that they forgot that they signed up for on their credit card, they go through and take a good inventory of those kinds of things and cut those out every once in a while. That ends up saving you a little bit of money. And that kind of savings on a monthly basis makes a difference over 5 and 10 years.
You know, my wife and I just did that, Clark. We went through and got rid of the Hulu streaming service. It's not that we had anything against it. We just didn't use it, and just making that one cut, we just paid ourselves another $100 per year. It doesn't sound like much, but hey, that's a couple of dinners out or a nice,
We did it with a gym membership.
What's that?
We did it with a gym membership.
Yeah.
We're like, well, we're going to need that money back. So now we go out to dinner instead with the money that we had with this other gym membership. But nobody was using this particular gym. We had another one too.
So it's not that you were blowing off financial or physical fitness. You were just enhancing your fiscal fitness.
Thank you. That sounds much better, doesn't it, Clark?
Exactly. And you think about these apps. I got a 5-year-old child, and I look at my email, and I'm like, I didn't buy this $18 app on Apple the day before, but sure enough, I go back and look, and it was some game he put on there, and he's able to do that. So, it's amazing the little bitty things that we get charged on our account, and like, man, if I just stopped those things, I'd have a little bit more money.
Yeah, absolutely. Clark Hodges, thank you for joining us on Memphis Morning News. Hope you have a great rest of your week, and thanks for getting us caught up on what's happening with dollars and cents.
Thank you, guys. Y'all have a great week, too.